Good morning and welcome to the market forecast, my fellow friends, family, futures traders, and Forex traders. My name is John Hoagland. Thanks for trusting me with your time. Wednesday, January the 27th. Lots going on in the markets and lots going on in the world today. We've got a lot to talk about. I'm dressed in my A number one Mac Daddy garb for Top Step here. We got some new stuff, so I thought I'd wear it today. Hopefully, if you are in the markets already, you're off in a good place here. Certainly, some moves in the overnight. Almost all of the markets that we look at are on my radar today for some possible opportunities, with possibly the exclusion of the euro, which kind of range bound a little bit. We're going to take a look at that very shortly. And as always, we're going to take a look at our markets in consistent context through the lens of risk management. As far as important information this morning, durable goods orders already out this morning. 9:30, we have the EIA petroleum inventories number out. 1 p.m. today, we have the FOMC announcement. Of course, these are all in Central Time. 1:30, the Fed Chair press conference. So lots going on. Not only that, there's a lot of earnings out today, already out this morning. We have AT&T, Abbott Labs, and Boeing with a big miss this morning as far as earnings per share is concerned, from what I saw. Also, after the close today, we've got some biggies. We've got Apple, we've got Tesla, we've got Facebook. U.S. stocks are set to open sharply lower already this morning, awaiting FOMC meeting news. No changes are expected to be announced by the FOMC today. And don't forget all those big earnings we've got going on today. The Reddit rally rages on. GameStop looks like it's up another 100% here pre-open this morning. That is quite the story. Crude traders are going to be focusing on the EIA after the API announced a 5.2 million barrel decrease in crude stocks. The EIA is looking for just a small increase in crude inventories. But apparently, there's some trouble, perhaps in the Middle East. Tensions with Iran does have the U.S. looking to increase military presence in Saudi Arabia. So we've got some things to be keeping an eye on as far as the news is concerned, and we also have plenty of known things coming out today. So we're going to take a pretty deep look into these markets. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. I got an email from Richie. I'm not sure if that email was asking the question for the forecast or for group coaching. So I'm going to go through those hopefully while we go through our charts here, and we will take a good look at what's going on. Good. I'm glad you like it. As always, I always got to say hello to everybody. So Felix, you got to get up pretty early to beat Felix into the room. You win the prize again today, Felix. Brian, good morning. Murph, good morning. Woke up a little bit late. Yeah, that's okay. There will be more opportunities for you. Charles, good morning. I sent you an email, Charles, hoping that you got that. Danielle, Bill, Patrick, Murph, Taurus, Tanya, good morning. Troy, Will, level 2, good morning. Caesar, you bet, level 2. Vlad, Shane, Richie, James, Chef Mike is here. I'm going to say Nambega. How many trades do people take on average? It depends on your time frame, Nambega. Some people look for shorter, smaller opportunities they're going to be trading more often. Personally, in any market that I'm trading, if I see 3 to 5 decent, good opportunities or good trades that I'm thinking about taking in a day, that's good for me. But it is, this is a personal journey. Everybody has their way of doing things, and it's a lot of it has to do with the time frame and the bites that you want to take out of the marketplace. Josiah, good morning. Jose, Ralph, good morning. Tim, Angelina, Shane, Tanya. I did say Mac Dad. I don't know where that came from, but good morning, JD. Good to see the Dancing Bears with us today. You're probably dancing pretty good this morning with the bear kind of raising its head here in our equities. Good morning from Portugal. Nice to see you. I think that's, I don't know how to say that first name. Wow, Carlos. Wow, Carlos. I'm just going to say, wow. Oliver, good to see you. Mr. Shine. Jason Bulldozer, good morning. Danielle. Okay. Main Point, good to see you. Viper Futures, good morning. Mark, Rob, Richie, yes. Okay. Either for the question is good. Okay, you're going to be joining us, I guess, for the group coaching today, which is still space left. I just sent the link so you can register for the group coaching. That's at 1:05 today. We're going to start at about 5 minutes late due to the FOMC announcement due at 1 o'clock Central Time. So there it is. There's the link. Good to see you. Oleg, Oliver, Andre, wow, Carlos, all of these things are always appreciated as far as feedback is concerned. We're always looking to expand the opportunities that we want to provide for traders. As for any definite times where we're going to include stocks, I don't have a time frame for that. I can't guarantee it's even going to happen, but we do appreciate it, and I will pass that feedback on to those that are constantly working on the product here. So we appreciate that. Okay. VIX is up about 18%, 27.20 with equities on the downside. VIX usually goes up. A little bit of fear coming into the marketplace, not really seeing it in gold, but we're going to take a look and see what we're seeing. The dollar index actually is up again, maybe about 0.5%, still holding above that 90 level at 90.59. All right, so let's jump in and take a look at the charts. As always, going from left to right, starting with the daily in crude. Here we go. Look at this. You would think that this market would be kind of not on my radar this morning, but for some reason, I feel like there's a storm coming here, and I'm just going to be patient and waiting for my opportunity to kind of rear its ugly head, if you will. We're still range bound, short time frame control, but when you look at the open interest over the last 5 sessions, including yesterday, there's been a 97,000 contract increase in open interest. That's about a 4.5% increase in total open interest. So there's a lot of money coming into this market, not necessarily directional, but probably doing some hedging for things that may or may not happen in the future. It's going to probably be the undoing of those hedges that are going to provide the opportunities for us. As far as the EIA today is expected, they're expecting a little bit of change in inventory. API, again, a drop of 5.2 million barrels. That should be perhaps a little bit of bullish information there, but the market, as crude oil sometimes does, goes the opposite direction. So we're going to still be trading with what we see here. We're going to be trading with short time frame levels, which have been respected and probably will be respected until they aren't. Take a look here on the 30-minute chart here and see what we've got. All right, so look how range-bound we've been. And look at where the market has been finding support and resistance levels. This is what I'm talking about when I'm talking about respecting short time frame levels. Okay, this is Monday. Well, Monday's low near the overnight low. Monday's high above Friday's high, but not really driving anywhere. Tuesday's low near point of control from Monday. Tuesday's high point of control from the last Thursday. So when we look at these visual levels that the market provides for us, when we're looking at short time frame control, in other words, there's not a lot of bigger money moving big product around, then we tend to adhere to some of these shorter time frame levels. if there were bigger traders coming into this market, and by looking at the open interest, it looks like there are, but we're not seeing it directionally, which leads me to believe that there's an energy building, if you'll pardon the pun, in crude oil that's going to provide a bigger opportunity for us at some point. When, where, directional, we don't know. So I'm going to just continue to trade what I'm doing. To do what I'm doing is looking for short time frame levels to be respected. And once those levels cease to be respected, then I think that we're going to see our bigger opportunity. Now, this is the way to widen the lines for the profiles. Richie, this is for you. If you just double click on the volume profile, you're going to see this. You got your upper value line, your lower value line, and your point of control. Make sure, of course, that they're enabled. You can choose the color of them here. You can also choose the thickness of the lines. You can go really thick, or you can go kind of medium thick, or you can go not so thick. So that's how I have that. The other thing that you might want to be looking at is I've got value area percentage at 70%, and I've got the value area pink. I've got outside value for the profile as blue. So you're going to be able to see very vividly where value is from yesterday, where value high, value low, and point of control are. Hopefully that's going to help you. All right, so what are we looking at in crude? We did not have a gap. We have very little overnight inventory. This is going to cause me to try and stay very patient and look for opportunities near the extremes of the balance area that we're in on the longer time frame, if we even get that chance. So it's on my radar for a bigger change, but I don't know if it's going to happen today. Okay? All right. E-mini S&Ps. Such a fascinating opportunity. What a market, right? So obviously, we're holding structure to the upside. We had the market put its all-time high finally in the overnight session yesterday. S&Ps are 100% on my radar today. Of course, they're going to be on everybody's radar. So the open interest dropped as we put in new all-time highs. That's not very encouraging for an upside auction to continue. You want to see volume increasing. You want to see more people coming in and adding open interest. And Murph, open interest is actual positions. One long and one short equals one in open interest. Okay, so it's not the unfilled orders. It's the actual positions that create the open interest. Okay, so when we see that we put in an all-time high, the market really tried to push to the downside yesterday. Was not necessarily able to do so, but we were not able to bring in more volume on an all-time high. We were not able to bring in more information or more creation of contracts at the all-time high. This tells me that this auction to the upside is tiring, and it looks like we are going to be taking a move in the opposite direction, which has pushed us down near our low from Monday. Remember that big spike to the downside Monday? That was a little bit of a warning shot, it seemed, right? We've got the weekly kickoff low here, which is 37.83 even. This is the level that I think that the market might truly start to break structure, and I would be a little bit concerned if we find acceptance or spend any time down below this level. If there's a sign of acceptance, we may see a whole lot of longs decide that they're going to need to adjust those inventories, and you might see a whole lot of shorter time frame or medium time frame traders looking to catch the big move to the downside. It's always a challenge. Always a challenge. Lacey's whining over there. Sorry, Lacey, I'll be with you here in a few minutes. Don't worry, girl. So, gaps. Richie, when we have a gap, here's yesterday's range. The market attempted to push lower, got a nice little rally close to the close. So our settlement level is here at 38.42.5. almost all of our overnight inventory has pushed price lower and lower away from that, which has created the gap. When we have a gap, it's an assumption that in the short time frame, excuse me, I get a little excited and I apologize. Forgive me for that. So we've got a market that's opening out of balance in the short time frame. Obviously, we're still kind of hanging in this area of balance, and we've got our weekly kickoff low and our weekly kickoff high nicely kind of bookmarking the range for the week so far. Interesting stuff. So when we have a gap, and this is a pretty substantial gap, we can make the assumption that there's a short time frame inventory of short traders. As price moves further away from settlement in the overnight, there's not a lot of big players playing this in the overnight. This is short time frame pea shooters like me. If we're going to continue to pile in here when the regular U.S. session opens, we're going to look for our sellers to come in and keep price moving in our direction. If we don't see that at some point, we're likely to see an inventory adjustment, which should bring price back higher, which, if we are looking for shorts, could give us the opportunity to look for shorts at a higher level. Watch the opening range. If the opening range is at the low of the session, we might fall into an inventory adjustment early in the session. If we can't close the gap, that'll give us an opportunity to perhaps look for a short for continuation to the downside for a true test of weekly kickoff low. And if that falls, if we accept below that, I think we may be in for some continuation to the downside. I'm not suggesting there's going to be a crash. I would never do that. I don't know if anybody can correctly say that is or is not going to happen. This is just an important level where I think some of our bigger traders, some of our larger institutional traders might start to think about adjusting their inventories. And remember, those bigger companies, those bigger traders are not necessarily outright. They're hedged. They're long stock, shorting S&Ps, whatever it is. They're not just sitting there looking to make money from price movement in futures. They're actually hedging big positions. So their time frame is different than ours. If we can find out what our time frame is doing, or what the other time frame is doing, the longer time frame, then we're really onto something. So we were kind of looking yesterday at the inability to hold above that weekly kickoff high, losing open interest at the high. I think we've got a nice little pullback going, and unfortunately, of course, it happens in the overnight. So I wasn't able to participate. Sat there all day short yesterday, and then missed the move to the downside today. But that's okay. It's okay. It tells me something that I need to know for possible opportunities for us today. NASDAQ, of course, on the radar. Not as much as the S&Ps. We've got much further to go before I think we're going to break any kind of market state. We had a small increase in open interest, and unfortunately, in the NASDAQ. For shorts, that is, we put in an all-time high last night, which was, I think, above. Yes. So we put in a new all-time high, which is in extended trading hours. It actually happened on the 3 o'clock bar, but the 2:30 bar is where settlement is. So settlement actually closed below the weekly kickoff high. We looked higher. We weren't able to hold the price above that level. Technically, is this an all-time high that occurred in a regular trading hour session? If I just move this over one little thing here, now it looks like it's in regular trading hour session. It's judgment call. So we know that the market doesn't like leaving all-time highs or recent highs at the extremes. If we just add this, it looks like that might be the case. We've got some shorts here. We've got settlement right here at 13,485.50. We got a little bit long here. We unraveled those longs. If we're holding some shorts here, we've got the gap to the downside. We might have the opportunity to see an inventory adjustment that could bring price back towards range from yesterday, perhaps even point of control, or perhaps even settlement from yesterday. Point of control looks like it's right at 13,500, our weekly kickoff level here. So market in short time frame, out of balance. In medium time frame, still in balance. Be patient. Again, it's on the radar, not that high on my radar. Gold this morning, actually kind of not that deep on, not that big in my radar. Now, this is the April contract. You're fine trading Feb or April today. I've already moved over to April for the charts here, and I'm going to probably be trading April today, but you're fine in April or February gold. It's still in rollover. It's still kind of range bound in rollover. Open interest, we lost 16,000 in open interest yesterday. It seems as though with rollover, which is, it always blurs volume and open interest. I'm going to say that this 16,000 contract loss in open interest is more related to rollover than anything directional that we can look at. We're back in range. We're centrally located in range. We've got lots of space above to weekly kickoff high, perhaps supportive down to weekly kickoff low. Taking a look at the 30-minute chart here, we have a gap open. Okay, settlement is all the way up here, 1854.80. Put that on your charts. The market opened with a gap. Have we moved? Not really. Do we have any inventory that we might be looking at the short time frame traders holding shorts? Yes, we might be. Did we get a little bit of an adjustment of that inventory? We very possibly could have. And when the market sits and kind of consolidates like this, it also works as a function of evening inventory. You got plenty of time to sit here and say, I don't like this short anymore, I'm going to get out. It's when everybody jumps out at the same time, when you get the big move back towards settlement or to close the gap. So while the market is in rollover, is in medium time frame balance, we're nearing the end, the bottom of that balance. Do we look for opportunities to buy against short time frame levels that have been somewhat accepted and respected? I mean, look at Monday. Monday's high, value high from Thursday. Monday's low, no real level there. But look at yesterday. The low and the high from the regular trading hour session were basically inside value high and low from Monday. This is what we talk about when we talk about the market respecting short time frame levels. Our overnight low here and our overnight low here, well, Friday's session low. When the market lines up this way, it's short time frame control. The nice thing about it is it's not showing excess, and it could bring us an opportunity as time goes on. All right, let's get through our currencies here. Euro, not necessarily on my radar, even though it looks like it's a pretty decent move to the downside. We're still relatively range bound. We have not seen any real testing or play with the weekly kickoff levels here. Range bound, short time frame control. We lost 1,200 in open interest. Nothing necessarily important there. This location that we are in right now just seems to be the auctioneer pandering. We had an upside move. We broke that structure to the downside. We're in I would say, a kind of a downside digestion area here where the auctioneer is going, okay, do I see any buyers here? Do I see any buyers here? Do I see any buyers here? And if he doesn't start to see buyers down around here, this weekly kickoff low, then we're going to have to start advertising price lower than that in order to bring in any buyers. So I'm looking forward to seeing that opportunity. Not necessarily huge on the radar, although we do have a pretty substantial overnight inventory. Again, settlement all the way up here, 121.77.5. A lot of short time frame traders short in the hole here. If we get the chance to see price down all the way at weekly kickoff low, that's really going to be an interesting spot, and that will put this back on the radar. I'm going to be watching to see if we have a chance to see price down at weekly kickoff low. But if not, there may be an opportunity for us to take a move in the opposite direction once if all of our overnight shorts decide they've had enough and they're not going to be continuing, or it looks like the market's not going to continue to the downside, then they'll all get out en masse. We might see a nice push to the upside, which could actually provide another opportunity for those of us that are thinking short to sell into strength. And for the Japanese yen, This is definitely on the radar. We have some pretty big downside potential today. Coming in this morning, seeing the play with this trend line here, we had a bit of a rising triangle here. It's not perfect, but what is in futures trading, and nothing is finite, and the same thing never seems to happen twice. But we've got a pretty substantial breakout, and we're spending some time and building some volume. It's only 26 here this morning, and we've almost usurped yesterday's volume in the March contract here in the Japanese yen. This is a potential bigger move to the downside. I'll look to see if we can get a test of weekly kickoff low. If we have support there, good, that's fine. I'm fine taking that profit. But if we get below it and spend any time and acceptance down below that, I think that there's some more space to the downside. A lot of that, of course, depends on the dollar. A lot of everything seems to depend on the FOMC meeting today. And I have been yammering here now for almost 30 minutes straight. And I'm going to be with you again this afternoon for the market recap. Dan's going to be coming back from his little trip that he's on, so you'll be stuck with me again for the market recap. Don't forget, join me for the group coaching today at 1:05 Central, due to the FOMC meeting. Always looking forward to seeing the good questions and things that happen there. I don't really have too many emailed in questions, so if you have questions that pop into your head through the day today, write them down, come to the coaching meeting. If I know, I'm going to tell you. If I don't know, I'm going to tell you. There's always the opportunity for us to learn something together. So what do I think is affected by the FOMC? Well, if they don't change anything, it's going to be already in the marketplace. If they do, if there's any major changes in policy, that might be a knee-jerk reaction, but I'm not really expecting anything huge today from the FOMC meeting. You might be more interesting listening to the Fed chair at 1:30 Central to see what he has to say about what they're thinking about in the future. So take your deep breath. Stay humble, grateful, and creative in your trading today. Get out there and profit. Trade well. I'll see you at 1:05 for the group coaching and at 3 o'clock for the market recap. I'm looking forward to a very exciting, challenging, and hopefully profitable trading day for everybody. Have a good one now.